I do not believe in diminishing returns, and I've been very clear about it. I do not believe in diminishing returns for the exact reason you're talking about. That the S-curve, if you look at the S-curve, we don't know where we are exactly. If we're at 1%, 2%, 10%, I don't think we're even at 10%. But if you look at the S-curve, that's the percentage of adoption, the S. And it could also be the value if you apply Metcalfe's law. But if you look at that S-curve on a log scale, a logarithmic scale, you'll see that the growth of adoption or value is exponential until about 50% adoption, and then it levels off. And so it must follow that if Bitcoin follows the S-curve, like computers, like the internet, like etc., telephones, like you say, like any other technology, if Bitcoin follows that S-curve, its value must grow exponential.
Bitcoin is on the cusp of an explosive price surge, according to the highly regarded yet anonymous analyst known as Plan B. Famous for creating the stock-to-flow model, Plan B has built a reputation for accurately predicting Bitcoin's past rallies, including the remarkable rise from $4,000 to $55,000 just a few years ago. With Bitcoin already up by 44% this year, Plan B suggests that this growth is merely the beginning. His predictions are bold. He expects Bitcoin to double in value, potentially reaching $100,000 by the end of 2024, and he sees the price skyrocketing to $500,000 or more in 2025. Over the long term, Plan B even speculates that Bitcoin could achieve the staggering milestone of $1 million per coin. Make sure to watch to the end of this video to hear Plan B's in-depth discussion and some of the data behind his predictions for Bitcoin. Also, if you enjoy listening to crypto-related content, please show your support by liking and subscribing to this channel by following the link in my bio. And get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains market intelligence, on-chain data and latest updates from experts in the crypto space. All of this is available completely free of charge. Signing up only takes a moment and you can always change your mind later on. Now back over to Plan B.
As an input in a very simple, linear, univariate regression model. It's very rough. It predicted 55K Bitcoin at the time when, as you said, Bitcoin was below 4K. And well, yeah, that was a very nice correlation. It's the correlation that's shown in the graph that you show. And well, a lot of people dismissed it right away because 55K sounded absurd at the time. But some other people loved it, and especially its fundamental nature. And well, a lot of discussion happened since. There's a lot of misunderstanding about the model, apart from very real discussions and critique that is very valuable. There's indeed this misunderstanding, and the wide predictions bands, the very rough estimates are one of those misunderstandings. Yeah, one thing I want to point out beforehand is that Bitcoin has an implied volatility or realized volatility, historic volatility of around 80%, which is very, very high. It's probably one of the most volatile assets on Earth. So yeah, it seemed appropriate to refit it to see either well, if the prediction was okay, still within the bands, and if the formula would change. So first thing is and it's shown in the yellow line there. I refitted the model with 5 years of new data. So that's 60 months, and what we can see is that the average value over the last halving period of Bitcoin was $34,000, and that's below the $55,000 that the model estimated, but still very close from a modeling point of view, and especially if you keep in mind that the model was made and the prediction was made in 2019 when Bitcoin was below 4,000. That straight line, the value and the formula, they haven't changed a lot. The parameters are still the same. The results are still the same. It predicts now 50K instead of 55K. It predicts 500K for the current halving cycle, and 4 million for the cycle after 2028 halving. But I think that's one of the misunderstandings, the wide prediction bands. On the other hand, there's also the fact this model, I did it a little bit different than the first model. I predicted the average value, and I inputted the average value of each halving cycle. So if the result or in the next halving period is anywhere near the result that we got last time, so for example, if the price is not 500K that the model predicts, but 300K, I would be more than happy. So one standard deviation is roughly 2x the model value, and divided by 2 the model value. So for this halving cycle, it would be the point prediction is 500K, and one standard deviation band is 250K to 1 million. And the 2 standard deviation band would be 3x and divided by 3. So those are the bands. And that's for the average about the period. So if we look back in 2028 and the average is, let's say, below 250K, that's out of the 1 standard deviation band, but in the 2 standard deviation band. But that would be kind of, it could be, it would be still okay from a 2 standard deviation point of view, but I would be a bit surprised by that. I think that's one of the big questions for this halving cycle and the years to come. Will there be diminishing returns or not? Because that would invalidate a lot of models and validate a whole set of other models. And that's the big question that every investor should answer for himself. I do not believe in diminishing returns, and I've been very clear about it. I do not believe in diminishing returns for the exact reason you're talking about. That the S-curve, if you look at the S-curve, we don't know where we are exactly. If we're at 1%, 2%, 10%, I don't think we're even at 10%. But if you look at the S-curve, that's the percentage of adoption, the S. And it could also be the value if you apply Metcalfe's law. But if you look at that S-curve on a log scale, a logarithmic scale, you'll see that the growth of adoption or value is exponential until about 50% adoption, and then it levels off. And so it must follow that if Bitcoin follows the S-curve, like computers, like the internet, like etc., telephones, like you say, like any other technology, if Bitcoin follows that S-curve, its value must grow exponential. So no diminishing returns until about 50% of adoption. And I really believe that. I also believe that I can understand why people see the diminishing returns. Of course, if you look at the data, you see it. Especially the last cycle was very off. But I think it's an outlier. Actually, if you look at no matter what model you take, the addresses, models based on number of addresses, model based on stock to flow, model based on time, it doesn't matter. You'll see 3 big outlier years. That's 2013, 2017, and 2022. So the big all-time highs of 2013 and 2017, of course, but also 2022, and that was too low, and so that, in my view, causes the data to look diminishing, where in fact we'll see exponential growth. But I'm not sure, and it will be. That's very interesting to see next couple of years. Maybe we could go back a little bit to the chart before this one, because I love that chart. It shows so many things. It shows that indeed the most of the rise is just after the halving, and then it sort of flattens out. It's stable for 3 more years, and that happened 4 times now. So that, yeah, I don't know if that's a pattern or random, but 4 times it's quite a structure. And then it shows the diminishing returns. So the diminishing returns guys would expect that green line to be below the brown line, somewhere between 100 and 200,000, maybe crashing below 100,000 even in the bear market. And if we just track this line, we'll know what there is. And the third thing you can see is that this wide prediction band between it is shown in this graph. It's the upper line, the yellow line, and the lower line, the brown line. That's about as wide as the prediction band can be. So you can almost see the 250k, 1 million prediction band of stock to flow that I just mentioned. So that will be very interesting. Going to that other chart after this. So basically, here I try to dumb down stock to flow to its core, because there were so many misunderstandings, because it was too difficult for some, too much models, too much statistics, too much mathematics, and it was pigeonholed by others into deep econometric discussions about autocorrelation and co-integration, which is nice, but it distracts from the core. And the core, in my point of view, or my hypothesis I should say, is that the halving increases scarcity, and that scarcity is valued by investors either directly or indirectly. So they invest directly in Bitcoin because it's scarce, or they indirectly feel that scarcity because there's no supply and there's no market. You can't get them. And so the core is the halving. And if you thus make a very simple stock to flow trading rule that says buy Bitcoin 6 months before the halving, and the halving is every 210,000 blocks. That's what you see on the x-axis there. So every 210,000 blocks there's a halving. That's every 4 years. If you buy Bitcoin every 6 months before the halving and then sell it 18 months after the halving, the 2 years around the halving, you would outperform buy and hold Bitcoin. And buy and hold Bitcoin is that blue line. That's just the Bitcoin price. If you apply this rule, you get the green line. So you'll end up significantly higher than the buy and hold. And even more important, if you do the inverse, if you would buy Bitcoin 18 months after the halving and sell it 6 months before the halving, so you would hold it only the 2 years in between halvings, you would end up with the red line. You would decrease your value over time. And that, I think, is not random.
Thanks for watching. Please don't forget to subscribe for news and expert predictions direct to your inbox.